So let's look at the primary signal. It's the big, intimidating Ichimoku cloud. It's very ugly. It intimidates a lot of traders. So yeah, let's try to get into it and make it as simple as possible, because it really is, even using the bog standard settings that come right out of TradingView, a very powerful tool. So it's called the Ichimoku cloud for a reason, because it has a big giant cloud running through the middle of it. And what this cloud does is it kind of gives a trader a sense as to what's going on with the price in terms of trends, right? So if the price is indicated by these candlesticks, and we're going to take a step back for a second, I'm assuming anyone tuning in to this channel is has a certain foundation of knowledge, right? So let's, I'm assuming that you know what candlesticks are. If you don't, you know, please go educate yourself. Tons of great YouTube videos out there. They're very good, very thorough. Just Google through or YouTube through candlestick patterns, you know, the basics of Forex trading, because the concepts from Forex trading are going to be applicable here quite a bit. And just learn the basics, learn the foundation. It'll take a couple hours of your time, and it's really worth it. So coming back to the cloud, right? It's indicating a trend. If the cloud is sloping down and it's red, pretty much tells you, looking into the future, trend's probably going to be negative. Right, just like this. If the cloud is sloping up and is green, tells you the trend might be positive. And if the price is indicated by these candlesticks as above the cloud, yeah, so like this back here, it indicates an uptrend. If it's inside the cloud, right about here, like these guys, it represents no trend. And if it's below the cloud, like it is here, it represents a downtrend. Never ever trade against the trend. That's my philosophy in this trading system. I used to trade against the trend. It works sometimes. But as I started trading larger and larger accounts, the losses stemming from that just became a little bit too much. Even though, you know, following still the 2% rule, but it just was like being tied to a post and lit on fire. So you know, I stay away from that now. Old traders and bold traders and all. The other component of the Ichimoku cloud, aside from the cloud, are these three lines, which when we get into the live trading examples, you'll be able to see a lot better how they work. But you have a conversion line that's looking at short-term price action. You have a baseline that's looking at slightly longer term price action, and you have a lagging span, which we don't really use in this method. But what the lagging span does is it simply plots the current price back a number of periods, there's a whole methodology behind this. We don't use it in this system. I like to keep it on my screen though, just to see what's going on, but don't worry about it for right now. In this system, we're going to use this baseline here and this conversion line here as our primary indicator. So if the conversion line crosses the baseline, which would have been right about here, going down, that indicates that we should be taking a short position on something. And if it crosses the baseline going up, that indicates that we should be taking a long position. But we'll get to that as we go, and it'll certainly become clear when we do a live trade example. So now let's look at the confirmation signal. I use the Twigs money flow indicator. What is that? The Twigs money flow uses true range and moving averages to show whether the volume in terms of flow of money into and out of a traded security is bullish or bearish. And so in this case, if your Twigs money flow column or bar is above 0, then that's a bullish confirmation. So if you've got an indication from the Ichimoku cloud that you should take a long position, you can come down here to the Twigs, have a look if that's positive, and that's a good confirmation, and vice versa for taking short positions, right? So to reiterate, if the Twigs bar is above 0, it is a confirmation of a long or buy trade. it's below 0, it's a confirmation of a short or sell trade. And if it's at 0, which happens sometimes, sometimes I wait to put on a position. Sometimes I put on a smaller position and then add to it as the confirmation signal plays out. Just kind of depends on the mood and the psychology for me that day. Something though, if you're interested in looking at that as a confirmation indicator, you're going to need to do some customizations on TradingView. The default twigs on TradingView is set at 21 periods, and it's a line, right? And for our purposes, using the Windigo trading method, it needs to be set at 4 periods, and the line chart needs to be changed to a bar. So changing from 21 periods to 4 periods, very easy. Go into the settings, go into inputs, change the thing that says 2-1 to a thing that says 4, and then to change it from line to a bar, stay in the settings, go to style, click on this little guy here, and turn it into columns. And then your trading screen should look something like this. Now, what we're going to do now is we're going to go through trading checklist for this system. We're going to talk about when to know to exit a trade, and then we're going to go over to TradingView and we're going to trade the S&P 500 for the 4th quarter of 2021 using this method. Yeah, so let's have a look at the trading checklist. This is assuming we're trading an hourly chart. It's the exact same checklist if you're trading a daily chart, just with one slightly different step, which will become obvious later. So where I like to start my day is checking on major economic data releases for the day. For that, I use tradingeconomics.com. And I have a look to see if there are any things that are marked in red there. TradingView will also show you, let's jump back. TradingView will also show you things of interest. So these will be major news events. And the ones marked in red are ones where, depending on what it is, I try to not have any open positions on. So that'll be major things like inflation, rates, jobless claims, things like that. And I also try to have no open positions really in anything these days. This is being broadcast in April of 2022. I usually try to have nothing open when there is a Fed or ECB speech. I've been whipsawed out of too many positions lately, and so I try to have things closed about a half an hour before those speeches. So let's assume though that everything's all clear. Have a look at your trading screen and start looking for opportunities. So if we're looking on the hourly chart, I start scrolling through and I find that the Ichimoku cloud's conversion line is crossing the baseline. Then I think a trade might be possible. If long, is the price over the cloud? Yeah, that's critical. If the price isn't over the cloud yet, then I wait. But we'll look at that in a second in the live examples. If it's a short indication, is the price below the cloud? If it's not, then we wait. Let's assume that we've got a clear signal. Have a look down at the twigs and see if it's above or below 0 to confirm the Ichimoku cloud's indication. If that confirms, then go ahead and place a trade, never ever risking more than 2% of your account. We're going to look into that in a second when we look into exactly where to set stop losses and exactly where to do take profits in order to make this system as profitable as possible. Yeah, so for me, as mentioned, I'm extra careful these days. So one additional step that I add if I'm trading on an hourly basis is that I like to go out and consult the daily chart as well. And I'll only place a buy trade if the daily price action is happening above the daily cloud, and vice versa for the sell trade. And this is the thing I was telling you is going to become obvious. You just don't need to do that for the daily chart if you're trading the daily chart, right? So don't go out and look at the weekly chart, because then you'll never place a trade. Now, so let's have a look real quick at placing the trade. When I place a trade, I like to use these little trading boxes, is what I call them. I don't know if there's a technical term for them, but TradingView makes them available using this thing right here. Not sure if that's available on the free version or not, but if it isn't, it's certainly worth getting if you're a visual person like me. So what I like to do is coming in here and looking at this. All right, we have a clear break of the conversion line above the baseline right there. Confirmation signal being offered from the twigs. We've got news coming up from Japan, but let's, for the sake of this example, just ignore this. We're trading pound yen, by the way. We've got decently bullish candle patterns here, so we're going to go ahead and set up a trade. What I like to do, I shouldn't say what I like to do, what I always do when I set up the trade is I set my stop loss right at or even slightly below the cloud if I'm doing a long position like this, or just above the cloud if I'm doing a short position. So just switch it around, but I like to set the stop loss right at or below the cloud, and I use whatever that number is in terms of price to size my positions. So if the delta between entry and stop loss is this right here, whatever that span is, I size my position to be no more than 2% of my account, right? So if I have an account of $1,000 and I want to risk 2% on a trade, then I'm going to buy however many units, let's say, of pound yen it takes for this delta to equal $20. Yeah, we'll get into that later, but I think that should be clear. And then in terms of taking profit, this system is most profitable if we set the take profit at 1.5 times the stop loss, right? So it's just the stop loss, which would be right about here, if we folded that over, plus another bit. So with a 50 to 55% win rate, doing 1.5 times the stop loss is quite good. I've also tried 1.3 and 1.4. It works, but obviously not as profitable. Getting into the 1.678 to even 2x, the number of successfully closed trades is quite low. So the actual official win rate goes down massively, but the results remain more or less the same. I like this. Again, I've set this up for my individual psychological profile as a trader in terms of what I'm willing to sit in and endure. Yeah. So how do we know when to get out of a trade? Yeah. Managing the trade. The trade only ever ends under the following conditions. That you're stopped out, that the 1.5x profit target is reached. Yeah. I sometimes close my trades there. Sometimes I even set it up to be automated to close there. Other times, if it's something that I'm watching closely as part of an overall macroeconomic picture, I might even add to it when it gets to the 1.5 range, or I might take 50% profit and then let the rest of it ride. Just kind of depends what the motivations are. As mentioned in the beginning of this is kind of a tactical approach to a sort of wider strategy. But even though it's meant to be used as part of a wider strategy, it just works on its own, which I'm demonstrating here. Right, so the other ways that you can get out of a trade are if your conversion line crosses the baseline in the opposite direction. So you see here we're trading, we're short, whatever this was, I don't remember. It goes our way for a while, but then it doesn't, and our conversion line crosses the baseline in the opposite direction. Right, and for me, that's usually a clear point where I close the trade. In fact, the only way a trade doesn't get closed there is if I'm not paying attention to it, or if there's something going on in the markets that day where I think it's just noise. Right, and we'll see that when we jump to the S&P 500 after this to do some live trades. So this is where you can sort of manually close a trade. And also, as mentioned, I like to have my trades closed in about a half hour to an hour before any major economic data or major central bank announcements.